Good morning, everyone, and welcome to our final session on financial aid for the 2025-2026 year. And we are concentrating on need-based aid today. In this series, if you have watched the whole series, you will have heard this over and over again. Financing college is part of the search strategy. Do not decide on the college and say, we'll figure it out after we find out if you got in. No, 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 don't do that. It's based on a family's unique financial situation. It's based on a learner's unique academic background. Because we have so many different types of learners at iLEAD, we did the full session to give every type of learner and every type of family financially an idea of how they might meet their strategy depending upon their specific needs. Once again, the best financial aid always, always, always comes from the college itself. Okay, this is a four-part series. You can go back and watch the videos if you didn't have a chance to catch the earlier ones. We did an introduction. We talked about the FAFSA. We talked about loans and debt. We talked about merit scholarships and discounting. And today, our final day is need-based aid, also known as grants. I'm just going to say it again. Strategy. This is a strategy. And away we go. Okay. So some basic terms that I want to go over before we actually begin the session, because I'm going to be using them. We have the term institutional methodology, and we have the term federal methodology. These are different ways that the colleges decide how they will award financial aid. Institutional methodology means that it is the institution that is determining how much of their own money to give. A lot of institutions will use a form called the CSS profile that digs deep, deep, deep into your finances. It's a terrible, annoying form, but if you're applying to a college that uses that form, it means they have deeper pockets and they are usually willing to give more aid. Most colleges do use some sort of institutional methodology, but the ones that really provide exceptional aid on a need basis, they use that CSS profile. There's also federal methodology. That's where you fill out the FAFSA. That's where your Pell Grant. If you're in California, your Cal Grant. And some colleges use just the simple federal methodology. They don't dive as deep into your finances. Most public colleges, RUCs or CSUs, they are using federal methodology. They are just strictly taking the information on the FAFSA and going from there. Now, defining affordability, it's different depending on who you are. But this is how it's calculated by the colleges and by the government. The government uses the FAFSA. That's how they figure out Pell Grants. That's how they figure out how the state figures out Cal Grants. Some colleges will use the CSS profile to determine affordability for your family. The FAFSA is federal, CSS profile is institutional. So when you hear us say institutional grant, or when you hear us say federal grant, institutional grants are coming from the college, federal grants, state grants, they're coming from the government organizations. Okay, so how is aid calculated using these two different forms or methodologies? For colleges that are FAFSA only, there are also colleges that combine the FAFSA info and the CSS profile info. So what's collected in these two forms is different. So they all collect income. They all collect assets. And by assets, I mean everything except for things that are locked into retirement. That asset could include property. That asset could include bank accounts, brokerages accounts, any place that's not locked by retirement. The FAFSA and CSS profile differ, however, in terms of who they're getting that information from. The FAFSA uses one household. If the student has a parent with, two parents, two different households, they're looking at one household. CSS profile doesn't care. If you have two households, they're looking at both households. Notice I didn't say parent. I said household, which means that, it includes the step parent, it includes the money from both households. The CSS profile schools consider that fair game. So there's your first difference, is that institutional profile, institutional aid, if they use the CSS profile, they're going to be looking at significantly more information than the FAFSA. They both look at the value of a small farm or business. If you had a student apply like about 2 years ago, you would have noticed that the FAFSA wasn't considering farm and business. They brought that back. And so they are going to be asking the value. The other thing, like I said with the CSS profile, both households, and one more big difference, some colleges will use home equity. Now, that is up to the college. The CSS profile will collect that data, and the college determines whether they're using that or not. There are calculations and formulas for how each college uses home equity differently. I know that USC and Stanford, two of our favorite colleges here at iLEAD, they don't use home equity in their calculation, but there are other colleges that absolutely do, and they consider that fair game. I don't mean all of your equity. If you own $1 million house, I'm rounding. If you own $1 million house and you have $700,000 in home equity, they're not looking at that $700,000. They're looking at a percentage, a portion. There's a calculation, and a lot of times it's related to income. So don't panic when you hear home equity if because a lot of us bought a house when it wasn't, and then suddenly the houses went boom, and suddenly there's equity. It's not the whole equity, but do be aware. If you live in an apartment you don't own, they're not going to look at that at all. Now, what do you do if the parents are divorced? So FAFSA requires one family's income. It's the family that provides the most financial support, or in this case, the parent that provides the most financial support. What does that mean? I don't know. Financial support could include the roof over your head, the clothes on your back, the food on your table. Doesn't necessarily mean the parent with more income. So that's how it's determined. The student will ask the parent, which one should I invite? And you decide who provides the most income. On the other hand, CSS profile, everybody's included. This includes step parents. It includes income from all over the place. What do you do if a parent is not available? In some circumstances, there are situations where the parent can't be found. There is an abusive situation where it is too dangerous to contact the parent. In these cases, there are non-custodial parent waivers. That is something that you as the custodial parent or your parent who is the custodial parent can ask for. It is not for a parent that just doesn't want to pay. If you have a parent and they're just saying, I'm not paying for college, you can't get a waiver off of that. It's only if there are true situations where the parent is unavailable or should not be contacted. And you'll have to contact the individual colleges to request that they use the waiver. Okay, so what is the definition of need? Well, there's your definition. There's the government's definition. There's a school's definition. But let's give a basic concept of it. You start with the cost of attendance. The cost of attendance includes tuition, room and board, and something called miscellaneous. All colleges calculate a miscellaneous. It might be based on transportation and books and things that vary, but they have a amount that they have determined. And so when you put all those things together, you get the cost of attendance. When you are looking at need, it's the cost of attendance minus what you can afford, according to the college, not according to you. So looking at how it works, let's say the tuition is $50,000, room and board is $20,000, cost of attendance would be $70,000. There's probably miscellaneous fees included in that. For our purposes, I'm not worried about that. Now, the college has done their calculations. They've crunched the numbers and determined that your family can afford $10,000. That's all you can do based on the CSS profile or the FAFSA or both together. So now your need is the cost of attendance minus that affordability determined by the college. 70,000 minus 10,000 means your need is 60,000. There are colleges that are going to be like, yep, we're going to take care of that. And there are colleges that are not. That's part of the strategy. Most colleges will tell you if they're going to cover that full need. Once in a while, we get colleges that will do it, even though it's not typical. We'll talk about that in a bit too. But it's a basic calculation. This is how much it costs. This is what is determined that you need. And then in between, we have that gap. And that gap for this example is $60,000. Now, where do you fill this need? The best need-based aid is typically from the college itself. It's not the magic scholarship. It's not going out and landing, once in a while, we do have a magic scholarship. We had one student this year, one that received a full ride Quest Bridge. That's a need-based scholarship. So once in a while, there's a magic scholarship. But in most cases, 98% of the cases, we're not going to find a magic scholarship. So The need is from the college. The college is going to determine it. So this is a strategy for families who are low or middle income. You will head in from the need-based strategy as opposed to the massive scholarship from the college strategy. So you're looking at colleges that might fill 100% of that demonstrated need, or that fill a high percentage of need, or that combine need with merit. So that's the strategy. You're looking for those colleges that either will fill 100% of demonstrated need, or they'll fill a high percent, or they'll combine that together. So you find colleges that are like that. If your kids are in my class, they have run the net price calculators and they have figured out how that works. Otherwise, come to me, I can show you. So sometimes we get a college that fills 100% of need. Sometimes they do it with the federal loan. Sometimes they calculate it without. So at this point, we've got a group of colleges that have guaranteed to fill that gap. Remember that 70,000 and there was, the college determined 10,000 you can pay. They're filling that 60,000. How do they fill that 60,000? They fill it with grants. And in this case, they're not going to even count the federal loan. They're going to cover that as well. So these colleges, more are added every year. This is every now and then I go out, I regather the information. These are the colleges that say we're going to even cover the federal loan that you might have taken out. This one, they fill it with some loan. This is typically dependent on income. So, even though you might have a higher income, you still might qualify for some need. I mean, consider this, a college, I think we've had like 2 or 3 colleges now go over $100,000 a year. You make $190,000 a year, you're probably still going to get some need-based aid in there, but you won't necessarily it's a sliding scale. And some colleges are going to fulfill that loan and some colleges won't. And more than likely, it's going to have to do with where you fall in the category of need-based aid. And so these are colleges that have offered to fill for some students and not others, depending upon the need. And then there are some that they guarantee to meet full need. All the colleges that I'm showing you right now guarantee to meet full need, no matter what. But they use loans as part of that package. So they consider the loan part of the financial aid. And if you remember our loan session, we had 2 types of loans, the subsidized and the unsubsidized loans. So the colleges that fill with loans are really filling that subsidized loan. They're taking it, covering it for you. These, on the other hand, they're not. So they expect the student to use that subsidized and unsubsidized loan as part of the package. But they are still, I mean, looking at $5,500 for that first year, that's, the area they're not covering, that's still pretty generous. You can see these colleges, once again, fill 100% of need. Kenyon's an interesting one because although they're saying they're filling it without loans, I had a student accepted to Kenyon, is at Kenyon with an amazing need-based package. There were no loans in that package. So they may not be on the list, but for that particular student who had a high level of need, they came through. They even provided for books. So you would be amazed. Don't just stick with the names you know. You might be surprised. And here's a little bit more. I had them in alphabetical order. Occidental is another one. They do take loans into account, but they are really generous with just their grants. And so hopefully some of these you've heard of, and hopefully some of these you may not have heard of, but now you have. And you should look at them if need is going to be your strategy. They have a variety of admission rates, which we'll talk about as well. So some of these are very hard to get into, and some of them are surprisingly not as hard. None of them are easy. None of them are above that 50% rate. Most of them are not above that 50% rate, but some of them are crazy low, but others, doable. So, don't knock those ideas out. Now, let's look at that one group. So most of the schools that meet need are highly selective. We have Stanford and Harvard and Duke and Pomona and USC, and these are the admission rates for these schools. So if your strategy are schools that meet need, some of them you're throwing a dart at a pea on a wall. I mean, it happens, but it's very rare. So do not depend upon these colleges as your strategy. But by all means, if you feel you're qualified, I never discourage a student from applying. I just want to make sure they have a balanced list. So yeah, but let's go a little further. We don't have to do the brand names. And if you look at some of the other admission rates, now we're getting into admission rates that are actually not, these are getting the equivalence of going to a UC. So they change every year. Some years they take fewer, some years they take less. It just depends on how many have applied. My own son went to Reed College. At the time he applied, it was about a 34% admission rate. Their need was spectacular, much more affordable than if he had stayed in state and gone to UCLA or Berkeley, where he was also accepted. Reed was an obvious choice for him because of the personal attention. And yeah, they treated us nicely. So you can see that we're moving away from that crazy amount. Now, admitting a student real fast. Now, this is another interesting list that we have here. These colleges don't advertise that they meet full need. That's not their philosophy. Their philosophy is that they provide scholarships and some need-based aid, but each one of these has that common data set where you can go and actually crunch the numbers, and you will find that there are colleges that will meet your need even though that's not their philosophy. And the way to look at that is you look at your statistics, your GPA, and you look at your extracurriculars, and you see if you would be competitive at a higher level than majority of the students. And they kind of dangle it like a carrot as well. So, it was really interesting. Whitman is changing. Whitman is moving over to meeting full need, but they were not full need when my son applied. My son was a high achieving student. He applied to Whitman. It was the least expensive college. It is crazy expensive. But they told me on the phone, they determined his need and decided to fill it, even though that was not their philosophy. So don't knock other colleges off the list. Don't be afraid of applying a little more broadly, but you might not know these names. I can tell you that a huge portion of these are on the Colleges That Change Lives list. These are colleges very student-centered, fantastic colleges. There'll be a fair coming for the Colleges That Change Lives in July, come every year. And they tend to be really, really generous, both merit aid and both need-based aid. So these are some things I would consider. But yeah, here's just a list of surprising colleges that will still meet a percentage. Now, looking a little closer, these are not 100% need-based, but let's take a look. So the College of Wooster, the acceptance rate goes up and down. I think I updated these for this year. I try to update them every year. So acceptance rate now we're above the 50%, 54, and the percent of students who had full need met were 67%. So they don't guarantee to meet 100% of need for all students, but they are meeting it for some. Kalamazoo College, acceptance rate is 80%, and percent of need who had, percent of those students who had need and had their need full met was a little under half. Rhodes College, 54% acceptance rate, a little under half had their full need met. So it doesn't hurt to still consider other colleges, and you really need to examine that common data set. Come and talk to me. We can figure out kind of which colleges might work based on admission rate, based on sort of where the student falls within their grades. And you can also use the net price calculator as well. And so you put your numbers in, you get an idea. The net price calculator will kind of tell you what an automatic need would be, but with these colleges that we just looked at that choose certain students to fulfill full need, your net price calculator may not be giving you accurate data at the level that they may be willing to give you. So it's something to consider. So don't be scared of applying to a college just for price. So the nice thing about the net price calculator, it is a tool that's required for all colleges in the US, and you can get a cost estimate based on tax numbers. And so it gives a glimpse of the formula as well. It gives a glimpse of what questions the college is going to ask. And I'm going to give you some examples here. So these three colleges, Reed, Amherst, and Bates, these are all colleges that guarantee to meet 100% of need as determined by them. How do they determine it? They ask questions specific to their school. And you can see that in the net price calculator, what I did was I cut and pasted several different net price calculators based on, I just went to the website and you can see. So we look at READ and we see that, well, we look at all of them. We see they all are asking for dependency questions. We see they're all asking for parent questions. They're all asking about parent assets. But then we suddenly start getting into different amounts. So we have the parent asset. We have 6 questions from READ. We have 8 questions from Amherst, and we have 7 questions from Bates. So they're asking different questions now. We don't know what they are until we get into that net price calculator, but you can see things are different. READ also has 3 extra questions, whatever they may be. So this is what you see when you start the net price calculator for these 3, not by coincidence. They look identical because they're using the same calculator. They're just adjusting it for themselves. So there's a number of colleges that meet full need that use a similar calculator tool. So here is a typical question from the net price calculator. If you asking about a home, do you own a home? Remember we talked about home equity for schools that use the CSS profile that meet full need. The first student answered no. And you can see that it's just, the question's just been erased. We're not going to ask anymore. On to parents' investments. The second student answered yes. Now we can see that they're asking questions about that home, the current value, how much do the parents owe, what was the price they paid, what was the year they paid it, and what's the current value of investments. We have moved on from that. So you can see that as you move through net price calculators, things open and close depending upon the student's specific answers. This is very different than a student that is using a net price calculator from a FAFSA only school. These are CSS profile schools that go deep into your finances. You can see the questions. They're kind of intrusive, but you can see why. So that was home equity. We have other questions that differ between schools. So one school here, school number 1, medical and dental expenses not covered by insurance. They want to see if you've got any outstanding medical stuff going on that they need to take into consideration. The second school is asking if you pay any private tuition. And not all schools ask that. So you can see that the calculation is very different, and you can see what the school is willing to look at. I was really surprised. I put in that we had, I think when my son applied, that we had $3,000 in medical and dental expenses, which most schools will brush off. $3,000 to them is not a lot, depends on your income. But one of the schools came back and went with the acceptance. They sent the award letter, and they also sent a note saying they needed receipts back from the medical and dental, meaning they were using it and they just needed verified. Only one school did that. So you never know what's going to be looked at or how that's going to come out. I found that really interesting. We didn't choose that school, so we didn't have to turn anything in, but I did end up with a medical situation a few years later when my son was at Reed. And I asked them, I said, there's a surgery coming. And they said, if the bill is 11% of your income, we will consider it as part of the financial aid situation. So they have their own policy. It was 11%. This other school just said, oh, you've got some bills, we'll take it into account. So every school will handle it differently. That's why you run those calculators, and that's why you have to wait for the results. Now, this is the University of California, totally different net price calculator. And that's what I wanted to show you when I sort of cut and paste these different things on here. This is a FAFSA only situation. They're not digging deep into your finances. They don't care about your home equity. They're not looking at medical bills, although they might upon appeal. But that's not part of the calculation. So you can see it's very basic. Look at this: adjusted gross income, any other income, taxes paid, assets, student assets, parent assets, and calculate. So they're using FAFSA only, and they can give an estimate. Once they actually get your FAFSA, that estimate may be a little different, but this gives you an idea of the types of grant aid that you would get at the University of California. University of California only pays attention to need. They don't care. They don't need a carrot to get a student there. So they're not going to offer scholarships for high achieving students. They don't need to, but they will offer need-based aid, and they're actually very, very good with need-based aid. I've been very happy with my lower income students that go to a UC. Happier at a UC than I am seeing what they get at a CSU, believe it or not. Lower expense CSU sometimes comes out more expensive for a high need student. So I find that interesting. Other net price calculators. What's really interesting here is I'm comparing the University of Arizona with Emerson. Emerson is a school that meets full need. It uses that specific calculator that we keep seeing over and over again. That calculator is actually from the College Board, believe it or not. They run the CSS profile, as opposed to the University of Arizona, which is asking for GPA. When you get a calculator that asks for GPA, they are almost always figuring out an automatic scholarship. But most of the other calculators are not asking for GPA because they're going based on need. So this is a little clue that when you get a school that asks for a GPA, that they may actually be calculating a scholarship in there as well. So as you go through the things, oh, Emerson actually does have GPA questions. It is one that almost meets full need. My mistake, almost meets full need. But you can see here, they're going to use a CSS profile. That's a very good sign, but they also have some GPA questions. I was getting excited, but I was wrong. Okay. A warning, when you go in and you are Googling, the best way to find the net price calculator is to Google. Don't wander around the website. This like a scavenger hunt. But be careful because there are some weird things that show up. You don't want to run College Raptor. You do want to be on the website, or you want to be seeing the College Board. So notice at the bottom, it has the Emerson NPC, Net Price Calculator, collegeboard.org, Emerson. Whenever you saw those kind of light blue examples that I gave, they're all going to be on the College Board net price calculators. Others maybe using different calculators, but you either want to be on the website of the college itself, or you want to be on the College Board. Beware of College Raptor. You will also see something called My Intuition, and you'll see that on the website of the school itself, and that's a quick calculator. You really want to do the not quick calculator. You want to do the in-depth, annoying, long, taking me forever calculator to really get a better idea. One will give you a quick thing, but the other one's going to give you a more accurate calculation. You can pull all this data off the common data set. This is where we can gather a lot of information on our own. And so you can always find a common data set by Googling school name, CDS. If you have a student in my class, they are becoming an expert at the common data set, especially after this week. They have all been digging their hands and getting dirty using the common data set and doing calculations, pulling out calculators. But let's take a look at the common data set. It gives us an idea about how a school deals with need-based aid. So this is Colorado College. It is a school that guarantees 100% need-based aid. Also has some other stuff going on, but you can get an idea that here this is section H2. I have it memorized. You just scroll to financial aid in the common data set. You can see the number of students that were seeking, that they admitted, the number that applied for need-based aid. Look at the difference in those numbers. Like the number of students who applied for need-based aid, like there's a lot of students that don't need any aid that go to some of these colleges. And I'm always amazed as someone who actually got need-based aid for my child that there are people that were paying the full amount. I found that interesting. You can see that 239 students were determined to have some kind of need. And more importantly, you can look in row D and you can see that all of those students were awarded financial aid. And you can see the number of students who were, where to go? Need-based aid. Somewhere in here is a calculation of the students who had all of their need met. You can see that those who had need, they filled 100% of it. So remember that calculation where the cost of attendance was 70. They determined you could only pay 10,000. That put that 60,000 in between. 100%. You can actually see the average financial aid package was on average $60,000 for this school. At the time I put this up, I think this was about 2 years ago, so the price has gone up, and so is the package. And you can see in this particular one, they also included self-help, and that self-help tends to be loans plus work study. So they do expect the student to put something in, and you'll see that that amount varies between schools. Get that clicking. Okay, so we're comparing now Pomona College to Colorado College. Both colleges guarantee to meet full need. Pomona guarantees it only They don't give any other financial aid. So this is the section of the common data set where they tell you if they also give those who don't have any need at all, if they give any kind of a scholarship. And Colorado College really does. And so you could see that they give athletic scholarships. And you can see 11 people got an average of $70,000 in athletic scholarships. So they are recruiting, they are bringing people in. You can also see that 35 students that had no need from remember that number we had just going back up here, the 537 applied. They only determined that 239 had need, but we got a lot of students in between. Some of them are getting pretty high amounts. Others are getting a little bit off the top. This is an average, but not a Pomona. Pomona is just no. We are only supporting students that have need. Looks like one student got some kind of a scholarship later on, but this is for first-time freshmen. There's no other help, and you're going to be paying full price if you're determined to not have need. And there's a lot of students paying full price. Okay. You can look at Colorado College. You can see we have the idea of the amount of a loan versus no loan. You can see Pomona is one of those colleges that basically says we're going to cover that amount too. So there is a difference between these two colleges. And I'm wondering if I should do this. What I'm going to do is I'm going to wait until we're in our Q&A, so it's not on the recording, but we can actually go in here and we can take a look at the different common data sets. And so we'll do that. Sorry for those watching at home. We're going to do that live because it gets messy, but you can actually go in and you can see the common data sets. What's interesting about it and what I wanted to show is that sometimes they're a PDF, sometimes they're a web page, sometimes they're on Excel. Every single one is different, but the data is the same. The data is apples to apples. Google the college name and CDS, common data set, and you'll get all their information. Now, just a review. 4 ways to pay for college. This is the final session. We talked about merit scholarships discounting. That's where they just take money off the top. If you are a higher income family and don't want to pay full price, that is your strategy. It's not going to work at Harvard or Stanford or Pomona, but it will work at thousands and thousands of colleges that want to give your child or you, if you are the student, money. Need-based aid, this is where you're coming in from a lower to medium, and that's the strategy that you can use to try to keep things less expensive. Remember also in-state tuition, you have a lower cost of our public colleges as well, but you can see there's plenty of options here. You can pay for it yourself. You can take out loans, but most people, they do a combination. They do a combination of all of the above. Maybe a bit of loans, maybe a little bit of savings, a scholarship here and there, and then some need-based aid. And I think that is pretty normal in the United States, that we are pulling from all different sources to try to get school paid for. So we are coming back in 2026. We are switching gears. We are done with financial aid, and we are heading into holistic admissions. This is how we look at when schools look at a student as a whole, as opposed to just GPA and test scores. They're looking at all aspects of the student. That's holistic admissions. We're going to introduce it with a case study. You're going to be the admission officers, and you're going to vote who you want to admit to your college. Then we're going to look at the University of California, and then we're going to look at the importance of courses and what you decide to do in high school and how that affects holistic admissions as well. So remember, it's all confusing, it's all scary, but you're not alone. You can come to me, email me, come make an appointment with me. I don't bite. And if you got a junior, upcoming junior. If you got a junior, they're in my class now. But if you got an upcoming junior, College Explorations class teaches this in depth, more so than probably a student wants to know. So on that, I'm going to say goodbye to our friends at home who are watching, and I'm going to stop our recording, but do come and try to join us for our live sessions. They're fun, and we're going to do a Q&A. So bye to those at home.